There's a lot of moving parts right now. But at its core is to start from a building block perspective is, um, as you know, is 20% of a bean is going to get you oil. Uh, and we are carrying a 52% oil share right now, meaning 52% of the bean's value is coming from 20%, which is an extraordinary number. In my career, I've seen it as low as 18%, but we always kind of hung out in that 25 to 30% area because it's a byproduct. Soybean oil is a byproduct, but now it's the
main
this
the
goal.
main co-product.
Yeah, when you breach a 50% marker on 20%, that's quite a bit.
That's right. Now, that's all because of biofuels, I assume.
Yeah, absolutely, without question. And so we've spent as an industry, $9 billion into additional crush assets, which will keep beans home to then fuel what we feel like is a very positive outcome on the proposed RVO, albeit without not knowing about SREs yet. So we're very intrigued to see how the finalization of this process ends up. So
What would you like to see that end up for the benefit of the farmer? How should it end up?
For the U.S. farmer, without question, if they just kept it status quo. If I'm a U.S. farmer, I don't know if I could have written the regulatory side of the compliance for the RVO any better. It protects the U.S. farmer first. So you can't, if it just stays steady and there are no changes, it's going to be a very exciting time for the U.S. farmer.
Now, it seems like we've got, when you look at the demand, the current demand for soybean oil and the potential future demand for soybean oil, we don't have enough. And what's that going to mean for soybeans? Are we not going to have enough, and does that mean a higher price for soybeans in the future?
Yeah, I mean, I'm very, very constructive. As a firm, we're prohibited from putting out price targets, but as I said on the panel, is that rising tide lifts all ships, and there may be a bumpy ride here as we end the year and as we get going and the policies take hold and we start to see a heavier flow of merchant trading. But at the end of the day, to your point, we've got to plant more than 83.5 million acres. I know, and we're going to have to incent the producer to do so, right?
Well, that's right.
And
they're looking about what they do next year.
Even though I know if you like to grow corn, you like to grow corn, but I think that once we've kind of cleaned up all of these moving parts, that's the biggest thing. There's so many significant factors that we're going to be in probably a range-bound market for soybeans for the interim. And I'd struggle to find a producer out there that is saying that they're having a bad crop this year. It's going to be it should be a monster. Right. Even the marginalized acres would have been, their yields this year in all likelihood are going to be, record-breaking yields 10 years ago. As far as prime Central Illinois type farmland. Marginalized acres in, for instance, Mississippi they're gonna be 60 plus in places, right? And that's not the world that I grew up in with soybeans.
What's in all of the decisions in Congress or in Washington, I should say, about where we go with biofuels? Help farmers understand what are the politics involved in all of this?
That's a wild question right now, but given the tariff situation and things like that, but Which policies are you specifically talking about? Because that's a broad range, because we hit 4 different.
Well, what Congress needs to do and what the White House may be pushing and pulling for.
Well, I think what Congress did and what the president and what the executive branch specifically did in its current RVO is to implore the EPA during this comment period to hold the ground. And the risk we have, though, and that does concern me is, and you made the statement earlier as well, is that like we're going to need a lot of soybean oil. So we were asked on the panel, like, what is the black swan event? And my answer was a drought, because if we have a very big drought, then prices could go too high
Right.
on feedstocks and RIN values, to where we then have to retrace and government would intervene there. So I think, I'll go back to, I feel like Congress did their job. It's just making it through the comment period. And I think they need to be very, very thoughtful when they decide how they're going to grant SREs, which is small refiner waivers for compliance, and how many gallons that impacts, because that is probably the biggest risk for us as an industry from a demand pull for beans / bean oil.
Now, we've talked about soybean oil. We're crushing beans for oil right now because of the value. We're going to have meal left over. Meal is obviously going to have to go down.
It's going down.
But yeah, but is there any opportunity for getting meal out of here at a market that wants it at
Yeah,
that
absolutely.
floor?
And if you look at kind of the cherry picking of tariff deals that have been agreed upon, Southeast Asia is a great place to go. And we have tremendous capabilities to hit Southeast Asia with meal. And that goes into, primarily aquaculture,
Right.
and
pork and poultry
pork and poultry.
Right.
Not as much pork, depending on which country you're in. For some, like Indonesia, but Indonesia's got its own policies going on right now
Right.
for B50 mandate. But there's also the unintended consequence of this is going to make the broiler industry, the layer industry, very, very happy, because there's going to be cheap U.S. domestic protein that's going to in turn keep us as American consumers across the board at a very reasonable price for, it'll take us a minute to get the cattle numbers back, but between pork and poultry, whether you're talking turkeys or layers or broilers, it's going to have a tremendous impact, because it's going to be cheap protein. And I was with a CEO of a major laying company in New York City a few weeks ago, and he said, I quite honestly couldn't draw up this any better than the situation is right now. You boys just keep doing what you're doing. So I think that's a good thing, right? That's something that people haven't quite flushed out, and we haven't went through the full life cycle of that yet, but it's coming, and we'll definitely feel it, I think, in Q4 of 2026. It's probably when you start to you start to see it all the way down, at the grocery store level. So
Omelets and chicken strips are going to be more popular.
well, yeah, and they're gonna be buy one get one free type stuff, because they'll be able to put it out and still make a profit. So